Mr. Manghnani, thank you very much for joining us here today. Good to have you on the show. Firstly, the kind of literal bloodbath that we are seeing on Dalal Street right now, Nifty breaching 8100 level. What is the next level now you are watching out for?
See, I think just recently we have done about 8065 or so, very recently, as in a couple of days ago. So that's the first, obviously, the most recent low would be the first level to watch out for. But I think the bigger level is closer to 8,7980. Now, why I say 8,000 is because the last time we came to 7990 and then we fell, we spent a few weeks between 7,900 and 7,600. And then we took off in that towards the end of the last expiry and had a 500-point single rally where we took out that 8,000 barrier. So generally what was a resistance should sort of become a support. So I think 8,7980 is a good support, at least the immediate support. I don't have too many opinions or views on Brexit. I'm sure you've heard enough. I just feel what's happening right now is as you get closer and closer to the actual event, which may end up being a non-event, who knows, because generally when something is so talked about or so aggressively watched or expected, it generally doesn't throw too much of a surprise. The only surprise it could throw is that actually Brexit doesn't happen because everybody is pricing it to happen. The way the currencies are moving and the wars are moving, because from what I gather, the three assets you buy in terms of safe haven are yen, Swiss franc and gold. Swiss franc is fairly stable, but yen has rallied sharply in the last 3 days. And even your gold from recently, just about 2-3 weeks back, was at 1,200, is already at 1,300. The yen about 3 weeks back was 111, today it's 104. So that tells me that the market is pricing in the worst. So that the only good thing that can happen is Brexit doesn't happen and we look beyond it. Or then the market just finds its next course of action and Brexit actually turns out to be a non-event. That's what I think we might actually play out.
That's an interesting, analysis that you've given, Mr. Manghnani. Let's take both these scenarios. One, if Brexit happens, or there is, considering more chances building up of a possible Brexit, how should an investor place himself, and what should be really the strategy if that's the scenario?
See, I think if you have missed out on the rally, that should give you a great chance because all events, whether major or minor, or the way it's being talked about of how bearish it is, will have a knee-jerk reaction. So if Brexit does happen, in addition to how much you fall prior to Brexit, you will still get one knee-jerk reaction. So I think for somebody sitting out, it will be an opportunity that, okay, I missed out on the rally, I'm getting a chance. If you believe the India story, if you believe all this, see, because suddenly if Brexit happens and then if the fundamental guys start saying, oh, now Brexit has happened, and you throw out the whole monsoon picture, you throw out all the GDP good numbers or whatever, then you're basically saying market just reacts to day-to-day news and all this GDP and monsoon is all humbug. We will see eventually how it plays out. So if you believe in the India story and you believe that the monsoon is going to be good, then you use the opportunity of a Brexit to buy the dip. But I'm sure, I'll give you in writing, if Brexit does happen and if the market has a knee-jerk reaction, everybody will come and say, please sell this market, don't buy it. Everybody will forget the India story because that's what sentiment does. Sentiment changes overnight, like it was all gloom and doom in February. It is all, hunky-dory today. It might even become again gloom and doom if Brexit happens. I don't know, but generally markets tend to overreact. But if you are a true believer in the story and you genuinely have, because many people say I have a two-year horizon, but then they become traders. If you genuinely have a two-year horizon and you get an opportunity to buy, then you should not hesitate. Then you should take the advantage of the fact that the market is giving you an opportunity which you probably missed out because of how fast the rally was from, let's say, 7,700 to 8,300.
But do you see a possibility of Nifty breaching 8,000 and going significantly lower from here in the run-up to that big vote?
I'll be surprised if it happens in the run-up to the move. I'll be more in sync with, if it does happen, there would be a knee-jerk reaction where then the correction could even take you back into the 7700s where we actually started this last breakout move. I'll be really surprised if we just took it out based on expectations of Brexit. Because, see, I think a lot of damage is already in the price. Like, if you see, say, who's going to be affected initially the most, it's got to be Europe and UK. Now, those markets, if you go to see, I mean, at the end of May, I'm just talking about May, so I mean, 15 days into the June series, DAX was 10,200 odd. Just a day before yesterday, it touched 9,500 odd. So it's already fallen 7% in less than half a month. Or if you take the CAC RON 40, for example, at the end of May, was sitting somewhere at about 4,500. Today, I mean, just 2 days back, it was almost breaking 4,100. So that's almost 8-9%. So many of these markets have already reacted in advance to Brexit. It's not like the market is waiting for the actual news.
Right.
So like I said, you could see a further knee-jerk reaction just on the news, or if it doesn't happen, then obviously all the guys who sold into the news will have to come and cut their positions, and then you could see like a bump up again. I think the bigger action will be more in the currency market rather than the equity market. I think that tends to show higher volatility, and you're already seeing it with the yen at 104 and gold at 1,300 or whatever.
What is it that you're looking forward to as far as then rupee is concerned against dollar?
See, unfortunately, I think if I mean, emerging markets tend to be excessively volatile when the currency environment itself becomes volatile. For now, I think India, at least the currency is holding up because the markets are holding up. I think only if the markets were to really tank, then the currency would really show some major movement. For me, the rupee is stuck in a range between 66 and 69. Yes, 69 is still 3% away, but I think as long as we remain in between 66 and 69, I don't think you'll see any major movement. Only if it were to break above 69, then I think you're looking at 72s and 73. So for now to talk about any volatility on the rupee, I think is a little early, because for me, technically, we're still stuck in a range.
And also, we had another big event which got over yesterday, Janet Yellen's commentary. How do you see FII's inflows into Indian markets really moving from here?
Without sounding cynical, I think I've stopped listening to Yellen. I think the events of the Fed are just to hype up the market, to find a reason to trade on that particular day. It's a yo-yo. One meeting they say that she's going to be dovish. One meeting she says she's going to be hawkish. I don't think anybody in the U.S. has a clue whether she's going to hike rates or how many times. I mean, that changes every day, the views as to how much the Fed fund. And if you see where the Fed projection is over the next 3 years and where they are today is a joke. Because if you look at it about a year back when they started, not a year, maybe November, December last year, when they started sort of projecting this rate hike, and the first rate hike happened in December, they had projected about 3% by the end of, I think, 17 or 18. We are still at that 0.25%, and almost we're going to be finishing 16 with maybe at 0.5%. So where the Fed was projecting and where it is actually, it is far different. I think personally central bank governors are too scared today. They're too scared to shake up the market. So if they're saying there's economic sluggishness, then I think the dollar is going to stay subdued, because if the rates are not going up, then the dollar cannot be rallying too much. So then it becomes good for emerging markets because their currencies are stable. So their inflows and fund flows should be stable, and there should be more money coming in than going out. So if we are saying that the world is going to be in a tailspin, then I think India is safe from a flow perspective. See, if the world market crashes, all markets crash. But I'm saying, if you're worried too much about fund flow, the dollar should not be rallying too much in an environment of dovish or lack of any interest rate hike possibility. So I think for now, I wouldn't worry too much about the Indian currency.
All right, Mr. Manghnani, we leave it there. Appreciate you joining us here on NDTV Profit and sharing with us your thoughts on where the markets are headed from here. So, of course, there is an opportunity for those who still haven't participated in the rally. But, of course, the Brexit vote will be an important one to watch out for.